Hey, what's going on, family? It's your boy MC Fire coming at you again with another Sunday market recap. It won't be a full Sunday market recap. I gotta apologize. We are not in the office. We're currently moving, so we'll be tapped in next Sunday with the full setup and maybe some other goodies. So stay tuned for that. But without further ado, we're basically gonna touch on the in plays and a couple other ones, key ones to watch, right, as well as the main market. Not gonna go over a full market recap. But if you guys have been watching the GNVO, that actually popped very nicely the day that we bought it and even kind of went a little bit more to the upside. It's very interesting. If you can see here, we kind of left a squeeze on for you. This has been a multi-day squeeze. But essentially, what we said, essentially to get in, if it breaks the high of that in-play candle with a stop out of the low, it did, and it ended up running pretty juicily to the upside. And after hours is actually looking pretty good too. So as it broke above, we went on, took the buy, continued to run, chopped around a little bit the next day, and then in after hours is looking bullish currently. That could change, but we definitely like the start. We love starts like that, where at least you get fall through and you're not getting swept under the rug right out the gate. A little bit same thing here. This play on the daily kind of got swept. Now this is kind of harder to follow because it is a penny stock and not a lot of volume there. But again, if you guys remember what we talked about on the last videos, we've been incorporating some new edge, and that edge is picking certain stocks that certain Congress members and certain other prominent in the know people might have on their watch list. So this is one of them. As it broke above this in play candle, which is also in the squeeze here, it broke above that. Really nice follow through. Considering this is a penny stock, it running, a few pennies to the upside is pretty good, at least from a fundamentals perspective. So we really kind of like seeing that. Even on a penny stock, you get to see how it plays out, right? Little dip here in play, and then wham, get washed, and then it kind of runs to the upside. We gotta watch out for stuff like this though, because it can get pushed around a lot if some big players really step in behind it. Really, this is kind of more of a, I wouldn't say, well, at this range, it's more of a blowout candle, really far from the 8 pair moving average in the 21. But this is something to watch, right? Tight little squeeze here, essentially fired off right where our indicator said it would. So, really good for acquiring the edge, even in a tight space, to kind of know when this thing will actually energize, right? As you can see here, your in-play candle was here, but the squeeze essentially starts back here. So this is your full rotation, but you have indication that it could be potential to the upside. And then the fall through, the fire is a day after. You're in a day before. So that's a day before edge, and you beat the gap. Really cool stuff. Something to know on this play here. But essentially, rip to the upside. Nice blowout candle. This would be an opportunity for us to take a look at, maybe make a decision, taking profits or whatever. If you're in, things don't just stay parabolic forever. So just keep in mind that it could slightly pull back. UNG, so-called Widowmaker. So the UNG, it's kind of a mixed bag for the UNG. New trend change according to our definition, but the unbalanced volume is still kind of red. So it is increasing ever so slightly. And when you look at it, you could almost consider it a divergence, right? There's a low. There is a lower low here, but a higher low on the unbalanced volume. There's very clear divergence. So if there's any fall through that can happen there, it's already kind of starting. Looking for a pullback, maybe a red candle for volume and getting washed, and then UNG could run to the upside. So that is really the main parts on the ETF hot list and what was in play. We're also going to look at the main market and then hop into some things that you could be aware of, right? So if we notice on the cues here, pullback, really nice pullback, but it since respected its rotation and is kind of bouncing away from it. We kind of want it to be lower for longer kind of deal. So we're looking for the market to Nice pullback on the day, but we hope that it pulls back a little bit more. Why do I say that on the whole market? Is because we want to be long-term buyers at this point, and buying the dip is going to be super valuable. So the Qs are doing that. Let's go look at the SPY. Remember I told you that the SPY, right, is the SPY was actually in play, throwing a red candle there. So in an uptrend, if we get a wash to the upside, that would definitely be an indication for us to go ahead and take a position to the upside, maybe a vertical or what have you, whatnot. But really, taking that, these SPY, Q, and IWI plays actually work pretty well. So we're definitely hoping that if we get a play to the upside, stop out of the low there, and maybe set a butterfly for the high. That'd be probably the best thing going for us for the SPY. We'll take a look at IWI, or IWM, excuse me. So IWM is the Russell is essentially the canary in the coal mine. You got resistance here, and it's not hasn't even gotten above the 50% mark on the Fed candle, right on that 18th of December there, when the Fed essentially came out with its pretty drastic news that it was going to only, instead of cutting interest rates from 4 rate cuts in 2025 to 2 rate cuts in 2025. Essentially, it's in the market into an uncertainty tailspin. The VIX spiked, and all three major indices kind of dropped. Right. This is a canary in the coal mine. Look for a head and shoulders pattern. Shoulders here, head here, and then if it pops back up here, look for a reject. That could happen, and it might drag the rest of the market down. So those three, that's my outlook on those three, because remember, we're not quite out of the woods yet, and we wouldn't mind seeing lower for longer personally. Let's go look at some other guys that have been looking pretty good. So we're gonna go look at XLF here. We like XLF because it's been in a pretty defined uptrend. You did get a setup candle to the downside. If you had taken the aggressive one, right, you'd be slightly in profit there, right? If it uptrend here, and then you have on the daily this subsequent setup candle that does get washed the next day. So there could be a significant follow through. We do want to see some follow through on the Fed share candle, but we like the XLF because for the setup candle on the Fed share day, it doesn't have like any follow through beyond that. So that is really swell for bullish XLF. If you get setup candles down here after major pullback, respecting rotation, no follow through, nice bounce, it could be a run to the upside. Also, XLC is kind of in that same ballpark. Slightly, a little bit more weakness, little fall through to the downside, but has since washed the other candle. Now it is in this danger area, but if you can get it back above that, that'll be a double test. You won't get peekabooed. I believe it'll run back to the high. That's my theory, and we'll play that accordingly for XLF and XLC. If we could see the XLF and the XLC run to the upside, I would also be looking at around that same time for the XLK to go ahead and push to the upside as well, right? Little stronger relative strength, right? It's kind of same deal as the previous ETF. It went down, setup candle, slight follow through, but then it immediately bounced, watching that red setup candle right there, and going to the upside. This way, right? It's already kind of at all-time highs. So all three, XLF, XLC, and XLK would need to push for me to say, yep, we're definitely out of the woods, and then we might even get some divergence away from the IWM anyway. So check out for that. Also, if we get, like I said, that SPY break, I mean, it really is kind of off to the races. We want to see this SPY one break. This one already got ran. The subcan already got ran through on XLF, XLC. So we want to definitely see the SPY one, a major indice break for the setup there. That'll be pretty huge, right? Something else to note is US oil, and we'll take a look at light sweet crude, right? So US oil is in this diamond formation here. Unbalanced volumes kind of trading back and forth. But like I said on last Sunday's candle, if we could see a major break above that and you have a squeeze here, that could be in play. Right now we're referencing the squeeze some more because essentially in dicey markets we like to look at the squeeze just to see essentially if is there an buying opportunity where options might be cheap, right? Squeezes are really good for cheap option buying, so we like to buy things when they're cheap, not when they're expensive, right? That's what we like. Down is good and up is bad. Close to the moving average is great. Away from the moving average is not so great. You kind of have to flip your mindset there. So often, so many people get excited when things are up because they get to take profits and they get to feel like a winner. But the reality is, you make your money on the buy. So down or on the pullback in an uptrend is actually good. A rip in a downtrend is actually good, right? When it starts getting away, that's when you need to be a little bit more cautious and think, hey, this is a danger zone. I can make a decision. I do have options. I do have shares. Let me pull some 40% off the table, then go 20, and then go 20, and then hold the rest, right? Um, so it's just something to keep in mind. You guys have to kind of research, like, your setups work better when things go on sale. So stop getting into the mindset that let's say Bitcoin or Ethereum's up, I need to get into it right now, right? Or I missed the boat. Just wait for the pullback. It will happen. It almost always does, right? Last but not least, actually, I want to take a look at XLC because it is in tandem, kind of with light, sorry, light sweet crude is in tandem with your XLE and energy, right? So as you notice, also similar, it's very very defined squeeze here, been prolonged, and a lot of selling pressure going into that squeeze. So any breaks to the downside, gotta watch that. And any kind of reference breaks to the upside, you gotta watch that too. Kind of keep that in mind because so often people assume that a descending triangle has to go down. There's been plenty of times when the descending triangle just respects this, and then the buyers actually step in there, right? They kind of run with it. There's been plenty of times that I've seen that. So don't automatically assume that just because there's downward pressure, it could be just somebody just stepping in, buying, 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 right? Buyers gonna step in and buying, and sellers just run out of gas and they run off with it, right? He just keeps buying at this price. He just said, hey, this is the line in the sand and we're sticking to it, and then boom, fires off to the upside. We're gonna look at XLP. We do see it starting to change trend here. So look for a potential rip to the upside and then for the short, right? So we're giving you this look ahead of time, not to necessarily take the play right now, but to wait for the pullback. This is exactly what I'm talking about. This is exactly the juice that you need to see early before it starts moving, right? If it goes down, new downtrend, we like new downtrends, right? But wait for the rip against the trend and then set up and then boom, right? You'll see that in a play like XLV where we took that, and this is exactly what we're talking about. Looks very similar. New downtrend that started here, right? Went down, pulled back up. As it pulled back up, right? New downtrend defined on the daily went slightly down, pulled back up. There's your setup candle, right? As it steps into the moving average cloud. This is the ideal situation for us. Nice little dip, new downtrend, push back up into the moving average cloud, right? With a nice setup candle, wham, sell right there. One fall through, nasty fall through, second roll, right? We definitely avoided this pullback here, getting out of our position. But as you notice, the theory still kind of holds true even without the setup. Even if it has a pullback, it pulled back into the 8-period moving average and then began to solve again. This is why I really kind of like to respect the 8-period moving average. There's nothing magical about it. It's just something that I notice in downtrends, uptrends. It really works pretty prominently, right? You can do it to the downside. You can do it to the upside. Another thing to note, CSCO. We did, if you guys were watching us for CSCO, we did already take our profits on CSCO. We saw this guy step in with this nice setup candle here. So it went on and took the butterfly buy. And all that means is that we had a wide butterfly essentially with a center strike right here. It did end up getting to our center strike, but we pulled it off, you know, as it got up there, right? It's already out of the money, and you're already getting premium from the two center cell strikes. So already a great risk to reward, close to 100. We didn't really hold it on for the next day. We could have. It still would have been profitable. Still would have got theta decay. Awesome. I think even if you held it on right now, it would be just fine, right? If we look, it's still probably above that's right. Yeah, still there. So our analysis on that, spot on. Butterfly worked. And if you guys have small accounts, butterflies, you need to research butterflies, how to set them up, how they work. Okay. It's not that advanced if you kind of know how to set it up. You got to out of the money buy and then even farther out of the money buy, right? For the call. And then you're selling two center strikes. That's it. Once you realize that the center from the wings is the same distance, that's your butterfly. Okay. So we put our mark here to kind of give us the alert. Got close to it. I just kind of watch this thing periodically. As it breaks above here, I was gonna, take the sell anyway because most of the time it's already at 100%. So if you want like consistent 100 to 200 to 300% returns, and you don't have to risk a lot of capital, butterflies are your bread and butter. If you're a small account person, butterflies are your bread and butter. We did do CSCO. It worked out really good, right? STZ also worked out amazingly good in our favor. We're actually still in this to the downside. It's pulling back slightly, but the setup's still the same. Now, this is a little extended when we didn't get the full pullback there with the setup, but we noticed that the really pronounced downside move, right, with the setup candle, and then even a very slight little pullback that gets absolutely nowhere in the upper third of the candle, not the upper half, not the upper 2/3. In the upper third of his candle, pulls back, breaks the low. We take the buy. Nice fall through roll one, roll two at first sign and second sign of danger. Maybe if anything, right, because we rolled it a couple times, wouldn't be looking to take it off until it gets to around 3 ATR. So we're just going to see what happens. If it gets above this setup candle, we'll let whatever is left there go for the position. But we're really looking for it to go to 3 ATR before we consider doing anything with that, right? Because that is the next sign of danger if it breaks below the 221.11. So those are the plays just so you're tracking that we're kind of what we're already in. We already are in NVDA, right? You guys know that for the leap. And if you're looking at this and saying, hey, it's too late, look at this. This is a nice pullback. So people are saying NVIDIA's up here and they want to FOMO you in and they want to talk about, hey, take day trades on NVIDIA, buy a high, stuff like that. Right, if you buy a high the next day after hours, it's getting washed. Right, it essentially closes here, and then opens, falls some more. So just be mindful of buying like at highs. Again, pullbacks are your best friend in uptrends. Rips are your best friend in downtrends. Identify your trend. Use a higher time frame to do that. Go to a lower time frame and hunt your setups on a lower time frame. It's a way you can stack edges, like higher time frame analysis. You can use a setup for sure. You can use squeezes, and you can put all that stuff together for a nice, juicy edge where you become the casino and you win. Guys, thank you again. This is your boy Desert, this is your boy MC Fire. We definitely appreciate you guys joining us, and we will see you on the next one. Have a good day and goodbye.